Awesome. Hello, everyone, and welcome to our fireside chat today with Vadim from Blossom Capital Partners. For those of you who don't know me, my name is Cheryl Mack. I am the CEO and founder of Aussie Angels, which is a platform to support people to run their own angel syndicates. And that is what we're here to talk a little bit about today. I met Vadim and Joanna, his partner at Blossom Capital, a couple of years ago. It was actually kind of a funny story. I was out for drinks and nobody had shown up to I'd booked drinks with like 6 or 7 people, and I'm sitting there at the bar with our group reservation, and literally nobody had showed up. I'd been completely stood up, and so I was on LinkedIn playing around, and Vadim messaged me being like, "Hey, I'm in Sydney. Would you want to catch up?" And I was like, "Hey, I'm actually here, and no one's with me. Do you want to come hang out?" And him and Joanna showed up, and we had a great time. People eventually showed up, guys. Don't worry, I'm not a total loner. But yeah, we had a great time that night, and I learned a lot about the two of them, and was excited to learn how much investing Vadim in particular had been doing, and really wanted to, I guess, understand a bit more and partner more in that front. And full disclosure, Vadim has invested in Aussie Angels, so he has an incentive to promote us here. But unfortunately, we won't be joined by Joanna today. She is not feeling well, so we'll send our regards and hope she feels better. But Joanna is the other half, and you'll have to tell us a little bit more about her. So today we're going to go through a bit more about yourself, about Joanna, about Blossom Capital Partners, and then we'll have a bit of time for questions at the end. So if you have any questions, please feel free to either put your hand up and I'll get you to unmute yourself, or if you can't talk for whatever reason, feel free to put them in the chat and I will read them out to Vadim. So let's get started. Vadim, your early background was very corporate-y. So I'm super curious to understand how you went from this really corporate experience to I'm going to start investing in startups.
Yeah, look, it's a great observation, because that was going to be one of the things I try to explain, that my background isn't in startups itself. I've got about 20 years or so in various commercial procurement sort of roles, where I've done a lot of interesting, exciting things for various large enterprises, running local, national sort of teams, and setting up global cross-border sort of operations and teams and things like that. So very diverse, but it's been really great for me, because it's given me a really rounded experience around all various assets of large organizations, and how to implement them, how to run them, how to track them, all the sort of fun stuff. But really, the stuff I really loved was getting in and doing the deals, the larger deals with big vendors, and putting in big transformation projects. And that's kind of my background a little bit. My background was originally, I started learning software engineering coming out of high school into university. And after a few years, I realized I hate it. Couldn't do it. I wasn't very good at it. So switched across to business law. And from that kind of ran the career that I've got. Now, in terms of Joanna, and I'll try and present Joanna as best as I can, and anyone who wants to learn a little bit more about Joanna's background, definitely hit us up, and happy to introduce and let you know a little bit more. But Joanna's background is very different to mine, where she's actually run private banking for one of the big four banks. She's at the moment a director of a multifamily office, and she's got built a lot of relationships in that kind of high net worth family office space. And her background is Bachelor of Psychology. So very much more people oriented, an extremely talented storyteller, amazing with people. And that's kind of where we kind of bounce off each other, whereas I'm a bit more of the boring stuff. Joanna's very, very talented and experienced with the more fun stuff, and I think anyway, dealing with people and things like that.
Yeah, you showed up and you brought Joanna, but it was really me and Joanna that clicked that night. No, I'm kidding. You're awesome. And I love, you got to have the boring stuff to balance it out. It's great. So let's go back to why did you start angel investing?
So yeah, I've been doing it for a number of years, and I've been kind of doing it myself for a while, and working in the environments that I've come out of, you do jump into some really exciting things, and you work with really talented people, but you do have to step away and you have to move on to the next project or build the next thing. And you kind of miss that opportunity to see how it grows and how it evolves. And I was really lacking that. And really something I was curious about, passionate about. And I just, for that reason, I just naturally gravitated towards startups and that whole ecosystem and building stuff and operating. And that's what got me interested. Originally tried actually to do a impact startup. Fantastic idea, I thought so anyway. Was going to help a lot of charities who had support from those charities, but it just wasn't a very investable idea. And going through that fundraising process myself really fell in love with it even more, really refined some of my own skills and learning how to kind of go about it, learning what's important. And so the combination of all of that experience and history kind of led me into now starting to back others who are far smarter, far better than I am at some of the stuff. But I can offer up a lot of those kind of generalist skills, a lot of those technical skills that I've built out in corporate enterprise, and really have a good appreciation for what businesses look for when they try and partner with vendors and suppliers, just because of my own background.
And speaking of some of those skills that you can be helpful with, you're kind of what we would call an operator angel, meaning that you help companies, when you invest in them. So maybe tell us a bit more about like how are you helpful?
So again, it comes back to a balance between what Joanna does and what I do. So Joanna's fantastic at actually driving relationships and that kind of network effect and getting exposure for founders and good deals to other investors, and really positioning it in ways that make sense to them. Whereas I'm more working with the founders, trying to understand their solutions, trying to really get a flavor of what's the problem they're trying to solve, how much impact can it have, how investable is it, and working with them around it, but also developing some of the collateral, some of the documentation, the pitches, etc., looking at their numbers. And I like that strategy stuff. I like the business model stuff. Once we get conviction between Joanna and I, that's where we start to kind of get more and more involved and put money behind it.
Awesome. And what are some of the things that you're excited about over the next 12 months in the angel space? It's been a crazy couple of years in terms of investing and venture in general. Like, are you excited? Or are you freaked out? Like, what are your thoughts?
Oh, it's a bit of both. I mean, you have to be a bit freaked out at some of the stuff, but in a really, I don't know, maybe it's just my positive bias, my natural positive bias. I think there's going to be great opportunities coming up. We're seeing a lot of the correction happening, obviously, to address that elephant. And we predominantly look at tech as our preferred sort of investment. A lot of that stuff is going to bring about opportunities. I think people are going to take the experience they had working across tech and now starting up something of their own. And we're already starting to see that, which is really exciting, coming up with novel, innovative ways to fix problems they've experienced. The flavor at the moment is obviously AI, and I'm really enjoying what I'm seeing in that. I haven't even had the opportunity to play with all the AI tools, but certainly jumping into that and figuring it out. But there's a lot of smart, passionate founders that are creating pretty interesting solutions that we're seeing at the moment. But generally speaking, I think tech will continue to be the space that we look at. There are obviously other growing verticals that others will look for, like consumer driven things and things that we don't generally look at. But yeah, I think we're going to see a lot more stuff that is pitched to us that we go, how did you think of that?
Flavor of the moment. I'd say it's more like the tsunami of the moment in terms of AI. Like, wow. Yep. I love it. Cool. And so tell me a bit about some of your current portfolio companies. Why did you choose them? What excited you, and how did you get access?
It's been a bit of an evolution from Joanna's and my kind of experience. So originally, I kind of tended to fall into investments where I kind of understood it a bit more. So I felt a bit safer. I didn't want to step out too far into things I didn't quite understand. So naturally, I built up a lot of my own portfolio with Joanna in the MarTech, FinTech, OpTech ad tech, sorry, and kind of business automation tools. Again, from my background, from her experience working in big four and at corporates, we can actually see how these are actually going to be used and whether or not there's potential adoption there. So we kind of built up the early portfolios around that approach. But as we've built out our networks and as we've kind of met people like yourself and others who have a much broader and different experience, we're getting a little bit more comfortable stepping out into new things. We're leaning on people to help us understand, hey, is this actually a good idea? And that power of the crowd and figuring out, is it any good, is really helping us broaden some of our portcos that we support. But some of the ones, that we find, they're just coming from other founders that we work with, other investors that we've chatted with that said, hey, check this out as well. Where, for example, we had Michael Batko, CEO of StartMate, provide some opportunities to us, and we got involved with those and invested in them after we did our due diligence. But, it's that power of our growing network that we're getting access to deals that we wouldn't have otherwise seen if we were just on our own. And that's the benefit that we're seeing and how we're growing the portco.
Where do you think there are like new opportunities to find deal flow? Like, are there any secrets you want to share? Or are you keeping them all to yourself?
Oh, no, look, I'm always happy to share, because the more I share, the more, we can actually look in together. And if other people are finding this sort of stuff, we'd love to have a look as well. But, the benefit of just being out there, being active and just chatting to people, that's where it's kind of bringing a lot of that to us. We can kind of set up the funnels and all that sort of stuff and have people kind of push content to us and have the pitch decks come to us. But there's a lot of benefit in working with others. But there's certainly some open source materials out there. Airtree has the open source VC. There's a lot of the ability to kind of position yourself as someone who's active and looking for opportunities to invest through online social. There's a lot of things you can do on your own, but it's very limited. And that's one of the things I found early on. I felt I only knew as much as I knew, and I needed other people to kind of help me understand how to do things better, how to do things more efficiently. And that's kind of thing where I'm still got a lot of opportunity with Joanna to do what we do, just more in a collaborative way.
Love it. And tell me a little bit about the name, Blossom Capital Partners. You have a fun background behind you.
Yeah, that's it. So as you can see, look, there's a light switch here. You can see like we've literally got this painting behind us. And so when we're talking to people, they're always commenting on the painting, and that's kind of where we kind of ran with the blossom idea. And I think blossom's a beautiful kind of analogy to kind of exactly what we're trying to do as well. We're looking at early stage. We're looking at founders who are really wanting to grow and scale their businesses. So there's a lot of things that you can apply to what we're doing. But we love this painting. It's really positive. It makes us feel great, and that's kind of where we've gotten the name inspiration from.
So why have you decided to start an angel syndicate?
I think it's one of the biggest challenges that I found with Joanna early on is there were a few barriers to entry. So there's all these different ways where you can build out a portfolio for early stage startups, and part of that could be investing in funds that actually do this full time and kind of helping them build out your portfolio. The other one is kind of doing it directly yourself, and you're going out there and individually choosing and cherry picking which startups and founders you want to back. And then there were syndicates, and the syndicates that we've worked with actually provided us with an amazing opportunity, because it gave us the opportunity to choose which investments we actually go into. And it gave us the opportunity to network and get involved with the investor group directly. It gave us the opportunity to actually have direct relationships with the founders and work with them where our skills could help. So it suited us a little bit more. But as part of the broader sort of strategy for us is, have a good complement of working with funds, working directly, working through syndicated sort of investments. And some of the things that we're seeing, these amazing opportunities that come to us, these amazing opportunities that come to our network, sometimes you just want to share them. And sometimes you want to say, hey, I'm getting behind this idea. We've done our background, we've done our homework, we reckon it's pretty good. And because we're looking at that kind of early stage sort of stuff, the entry to barrier in terms of cost, in terms of complexity, it's less so than the later stage things that require a little bit more technical knowledge and understanding of how to kind of assess financials and how to assess markets. It's a little bit different, and it kind of suits us a little bit more.
Awesome. Yeah, I mean, for me, when I first started, syndicates were one of the best ways of getting access to deal flow, because it's like, well, where do you start? And I talked to a lot of new angels that are like, I don't know where to start. My answer is always join some syndicates, like deal flow in your inbox, and then you can branch out from there. So tell us a little bit more about.
It's more possible. So it's just more possible to grow your portfolio. I mean, we all know that the opportunity with startups, the challenges with startups, and so the more you've kind of backing and the more you're working with, the more opportunity there is for those sprouts to shoot quicker. And if you're early to this, or if you're kind of looking to do this as a portion of your overall strategy, but not too much, it's a great opportunity to go, well, I can afford to do a smaller one, $2,000, as opposed to, trying to put in $25,000, $50,000 into an individual sort of companies. So it's a great complement to other ways of investing.
Yeah, I love that syndicates also allow like smaller checks as well. It's because it's like, well, who has $1 million to get to 40 deals and like 25K checks each? You just don't. Well, maybe some of you do. I hope some of you do. Anyway, let's talk a bit about what you look for in founders.
Yeah, so we very much focus on Aussie startups. That's one of our key criteria. We want to support the local ecosystem in Australia. It's pretty exciting, and we've got more than enough proof points to show that we're making some big successful companies out of Australia. But the market here is big enough to provide some big opportunities and successful opportunities within our own country. So we then specifically focus on tech or tech-enabled sort of business models. We believe that that's kind of where we're going to see a lot of growth or faster growth. And in addition to that, we want to see some, because we're looking at the early stage sort of type of business, we want to see that there's things that give us conviction around its ability to scale and get to that VC scale. Has it got traction? And even if it's not monetary, there are other signals that we look for to demonstrate that there's a demand, a market fit for it, and there's traction. And one of the other key things that we look for is working with founders that have got experience in running or operating a startup in the past. And the reason for that is, again, because it's early stage, you want to mitigate some of that risk. And you want to work with people who kind of understand the challenge behind it. And that just gives us a little bit more confidence. Not to say that in my personal approach that I haven't backed first-time founders. I certainly have. That I haven't backed ideas just purely at concept or idea stage. I have. It's just with a syndicate, I know that if I'm going to be presenting it to other people, they may not have the same risk tolerances as myself and Joanna, and they may want to see something a little bit more progressed to get a little bit more comfortable around it. So from a personal point of view, I love the people that are looking with, with those massive ideas, with great ambitions. We definitely want to always have a chat to them. And from a syndicate point of view, it's just taking a step back and just being a little bit more measured around the sort of opportunities we share with others.
And I guess it also makes sense if you write, personal check into some of those really, really early, risky kind of first time, I have nothing businesses, and then get the pro rata rights. And then you can actually offer that to the syndicate if they are a little bit more proven.
Yep. And finally, there's a little bit of an us flavor about it. It's whether Joanna and I would actually use it. Is it something that we actually get and we would want to use ourselves? And so that kind of, for us, is just the more personal touch around the sort of things that we want to look for.
Yeah, And I guess around that point, you kind of talking about your risk profile versus maybe other investors. Just a question from Charlie. Australia's investment community are sometimes known to be conservative. I can definitely attest to having experienced that. So particularly when it comes to like early stage startups, like what's your take on this?
I think we've got an evolving community of angel investors. I think certainly, 5-ish plus years ago when I was kind of jumping into this head first without any knowledge, I felt like I was jumping in with limited support and kind of relying on myself. But as I look at the ecosystem now and watching it over time, that early stage sort of investor community is starting to see the benefits of being less risk averse and starting to back exciting founders and things like that. I think, and I'm only going off anecdotal sort of things that I've read or things I've heard, you may be seeing that from venture funds and from VC sort of level investments who have a responsibility to invest smart, to be careful with other people's money that they're managing, and they're getting paid to manage it really well. And so you will always have a level of risk aversion and sort of less inclination to back the earlier ideas. So it's just, you got to know who you're after, sort of thing.
Yeah, I think with deal by deal, like investors who are part of the syndicate can make that decision on their own. So,
Exactly.
if you're more risk averse, then you pick the ones that you feel are a little higher up on the traction scale. So I think that's the benefit to syndicates. Can you tell us a bit more about like your investment strategy around the types of founders that you're picking, or types of startups that you're picking, like stages, sectors, like things like what do you look for in your investment thesis?
So certainly seed and pre-seed is where we are exclusively looking. We just don't have the capital to back, Series A and above and that kind of institutional level investments. So for us, the strategy is certainly to look at the earlier stage founders. They're looking at pre-seed and seed. Again, technology driven sort of business models is where we're also looking. In terms of the investment strategy itself, I mean, it forms part of a broader investment strategy where there's other asset classes that we're looking at in addition to these early stage ventures. So it's making sure that we've got the right allocation to do toward these earlier stage companies. And so based on that, we probably are looking at doing maybe one every couple months, because we don't want to overextend and we don't want to oversaturate and compromise the quality of the things that we're putting out there. So we're probably looking at around 5 to 6 opportunities a year that we'd look to back.
And in terms of check sizes, what are you hoping to deploy into those companies? And is there a minimum check size that you'll ask from investors per deal?
From an investor's point of view, we're being really bullish, and one of the things that we really want to do is promote the ecosystem and the growth of it. So from a minimum check size, it's $2,000 per investment as a minimum, which is unheard of to get involved in early stage ventures and early businesses and actually take, so from that point of view, we're saying everyone, you can, if you're early, if you're an early investor or a new investor, it's not going to really overexpose. From our perspective, it really depends on the stage. Anywhere ranging from pre-seed, where we're kind of around that 5 to 10K mark, up to seed, where it goes up to anywhere up to about 25K per investment.
Awesome. And in terms of any other requirements, for people if they want to join your syndicate?
Do you know what? This is probably a big shout out to Aussie Angels and how easy you guys have made it to get involved. Look, it really is. Jump on, have a look at the page, and provide any feedback if none of it doesn't make sense. But it's a click of a button with Aussie Angels, and the benefit of it is all you're effectively doing is saying, put me on the list to receive these opportunities. When the opportunities come, you don't have to do anything, or you can choose to get involved with the ones that you like. It's really up to you. There's no costs that you guys have made. There's no commitments you have to make. It really is just about being part of the community, being part of a group, and getting the opportunities to you as we start to back some of these things moving forward.
I swear I did not plant that question, but yes, it is quite easy. So yeah, we had a question from Natalie, I think more from a founder's perspective, but any tips for first-time founders to improve their appeal next to experienced founders?
Oh, I mean, it's a topic on its own, but I guess what we look for in first-time, early-stage founders, maybe even second, third-time founders, it's always about the opportunity that you're looking at. So it's how big can it be? And what are you going to do with the funding in terms of how quickly you're going to use that funding to get to the next stage? Like, have you got a clear idea of how you're actually going to go from, for example, pre-seed to seed? What are the milestones and what are the outcomes that you need to hit in order to be seed stage ready if you're a pre-seed, for instance? So it's all about, for us anyway, providing confidence and conviction that you know exactly what you need to do to get from A to B once we give you the money at A. And importantly, how quickly. And that's one of the reasons, like I said, why we like tech opportunities, because there's a greater velocity of scale around those than others. But that's kind of at a high level. Natalie, I hope I've answered that. There's probably a lot of other things around the team, around who you've got supporting you if you're a first-time founder, what kind of support advisory you've got in the works, and what kind of validation you've done to show that, hey, this is a genuine business model and it's actually going to have demand. So there's a lot of other things, but for us, predominantly, it's knowing, hey, you're going to get a bunch of money today. How are you going to get from A to B and when?
I guess speaking of that, like when you're looking at deals and looking at those heuristics, what are some of the things that you do to evaluate whether you want to invest or not?
It's maybe an extension of the previous question response. So how knowledgeable, how experienced, what kind of expertise does the founding team or the founders have with the problem that they're trying to solve? It's always important, because if they're stepping into something new, it does create a little bit more risk for the investor, because there's a lot of unknowns that's going to trip up anyone, even some of the more experienced founders. It's about doing a bit of understanding of the market and the particular area or vertical that they're getting into. Who are the competitors? How big can this be? What are the barriers to entry? And like I said at the start of the call, it's a lot of the boring stuff, but that's the sort of stuff I love to do. And Joanna's a great sounding board for it, because she kind of brings that kind of real world application and thinking around it, whereas I'm coming at it more of a business case, corporate analysis sort of thing. There's the business model itself. How are you going to make the revenue? How is it actually going to make money? How are you going to be charging? How's it actually going to grow? What's your go-to-market? How do you plan on getting it out there? Have you thought about it? What are your funnels? All that sort of stuff. So there's a number of different thoughts and checks and things that we do to give ourselves confidence that this is a viable investment. And I should have written this down. I'm trying to go off the top of my head, so I do apologize.
That's okay. I was wondering more on that one. Like, do you actually sit down and like do the math on like how big this could be as an opportunity in terms of the business model, or is it more like just kind of a gut feel?
Again, it's talking to people in my network, understanding things like things that I don't know as well, soundboarding of other people in my network, and I'm working with them to go, how big is it? But certainly try and do as much of it as I can on my own, and taking that academic sort of view to people I know and going, what do you think of this? Have you got experience in this? Or where there are domain subject matter experts, actually talking to them and going, how hard is it to actually do some of this that they're saying is really easy? You know, a bit of a reality check for myself. So
Yeah. I know, a lot of people, I get that question. It's like, oh, like, you have all these analysts at the big funds who are doing all these analysis around how big the market is. And I'm like, as an angel, I don't really sit down and like do the math super deeply. I get a sense and look at the founder and talk to people. So I'm glad to hear that, 'cause you're like, oh, I have this analysis background. I'm like, are you doing the math? Like, and what math is there to do at this stage?
oh, look, every model's a hockey stick.
Of
You just
course,
kind of
right?
go, right, well, how quickly can it become a hockey stick? Some industries just have massive lead times to convert sales, especially in that B2B and B2E space. So you go, right, well,
Yeah.
you think you're going to make $1 million by X. Believe me, it's actually going to take you X plus 3.
Yeah, definitely.
I'm getting caught up talking in numbers, even.
The numbers are still good. You still have to figure out those returns, right? And how many investments are you on now?
So across the portfolio, we've got 25, and
Yeah.
I
And
think,
you've done a number of funds as well, right?
yep, a couple of funds. I think we're kind of lucky that we've only ever really had one failure within that group. Now, ironically, it was probably my largest check ever into a single investment. But you kind of take your lumps with it, and a lot of lessons learned from that, and a lot of sort of understanding of how to do things better moving forward. But yeah, very lucky that only the one.
Yeah, awesome. I mean, yeah, I'm a little above you and have more than that. So you must be a better angel investor than me, which is why we have you on here. Everyone follow Vadim, not me. How do you balance that? Like, how do you think about balancing your portfolio in terms of like syndicates versus personal versus fund?
I think originally for us, it was more personal direct because we wanted to actually get the exposure and the lessons and the learnings from it. One of the best ways that I've always done any kind of new thing is by doing and not relying on others. So now that I've gotten a little bit more comfortable and tried different things, using safes, using priced equity rounds, using convertible notes, crowdfunding, even all these different sort of tools and instruments to invest and understanding it more directly and different variations of each. Now starting to kind of back off and go, right, well, I feel like I've got more confidence and I feel I got some of that education. Let's now work more with funds and actually learn from them how they operate and how they do things and see if we can apply some of that within our own. But the benefit of working with funds and syndicates is now we're actually growing as individuals, as angels ourselves, because we're learning from others around stuff where they've stuffed up or they've gotten things wrong. And we're going, we didn't even think of that. So so the balance is becoming more and more around that kind of syndicated or fund style investment. Originally, it was predominantly just direct and ourselves because we wanted to. And we wanted to have that direct relationship with the founders and actually test our own assumption that we could help. With Joanna's skill sets and my skill sets, we didn't know whether people would actually value those. And it turns out that, we have been able to help quite a few.
Yeah, absolutely. Can also confirm through Aussie Angels.
Having said that, we're always upfront and said, hey, we don't actually have to be active. We can be passive. If all you're after and you've got a very, quite methodical and quite happy space sort of plan, and you're happy just to take a bit of money and run, and we trust you, we're backing you, go off and do it. We actually don't get too far involved.
Yeah, I think that is a good trait for an angel investor around like, look, I can be helpful when you need me to be, but I can also let you do your thing when when you don't need us, instead of just trying to like insert yourself. So I've heard a number of angels trying to do that.
Yeah, we've never come at anything and said, look, if we're going to get involved, we need an advisor role or a board role and all that sort of stuff. And that's just more us. We just don't feel that we need to do that or that we should be doing that. Because like I said, we're investing in people who are far smarter than us, far cleverer, creative than us, and they've got these amazing ideas. let them go off and do it. We don't need to be the wet blankets.
Yeah, I think it doesn't make sense at the early stage, like, when founders are like, oh, this investor wants us to have a, more formal board and be on the board. I'm like,
Yep.
you're going to be like doing all this extra compliance and admin stuff just for what exactly? Like, anyway, so we'll open it up to questions now from anyone. If you want to ask a question to Vadim directly, just feel free to put your hand up and I'll bring you off mute. Or if you can't talk for whatever reason, feel free to pop it in the chat, as a couple of other questions have already been in the chat. And I think there was a question from Charlie around the difference between virtual and Aussie Angels. Binko answered it quite clearly, I think, in the chat. There are a number of startups that go onto those platforms. I think those companies are awesome, and those are good opportunities. But these are slightly different opportunities where we are relying on the relationship that Vadim has with the founders in order to get access to that deal. So it's the type of stuff that wouldn't necessarily be on a platform like virtual. And we also have the added benefit of investing in the startup as one entity. So it's a lot less admin for the founder. And I think that's often why founders choose angel syndicates over equity crowdfunding, because even though the regulations allow for more than 50 people on their cap table with equity crowdfunding, it can still get complicated. So yeah, that's the main differences.
Yeah, and I've also found that with syndicates and things like that, you can work with the founder to get the terms right that suits both. And having done crowdfunding myself and actually invested through crowdfunding, there's no opportunity to actually influence the terms of the investment. So the valuation is the valuation. That's what you come in at. The terms of the instrument, the priced equity or safe is just, it is what it is. And you need to be comfortable with that. With the syndicate, you usually get the syndicate lead or whoever, or maybe even a lead investor or VC who's doing the bigger round, and you're just getting an allocation. Those terms are usually negotiated, and there's a balance, there's a better balance. But that's my personal observation.
Awesome. We've got a couple more questions in the chat here. One of the things that angel investors tend to be limited on is ability to follow on, as in make follow-on investments, but can make a material difference to ongoing capital strategy and success for the portcos getting that follow-on funding. So how's your network / relationship into later stage funds or investors to help continue with the funding?
Yeah, it's a great question, because one of the sources of our deal flow is actually through the family offices, through high net worth individuals, through VCs. So we work with some of those to actually get access to the earlier stage things that we look for. But on the flip side, through those relationships, we can actually start to present those opportunities up the chain. And you're looking at corporate VCs, venture capital funds, and all that sort of stuff. So there's a big range of them that we know in the ecosystem locally. But I'll preface that by saying Australian. Joanna and I are very comfortable saying we don't have too many global, if any, global sort of contacts. And we like it that way, because we spend time looking at the opportunities locally in Australia, as opposed to helping companies scale and mature and go cross-border. That's just not what we do. We're more investors rather than operators in terms of helping scale.
Yeah, and we do have a couple other syndicates that do focus more on that, and I think that's the beauty of the platform, where there are different types of syndicates. So awesome. And I guess I love how you talk about you get deal flow from them, but then also you help startups flip up and get that investment. So it really is, yeah, I love the collaboration there that you all work together. Cool. And then I guess we had a question around hardware and SaaS. Do you invest in hardware companies?
No, I generally steer clear of hardware, and that's more of a knowledge constraint. So again, having come from corporate enterprise and a little bit of my software engineering background, one of the things I've worked in quite a lot is IT, whether it's commercial management, procurement of IT. So I have seen the kind of churn and the pace of innovation around hardware. And from an investor perspective, because I don't know too much about it, that's what I lean on when I think about it. And I don't know the obsolescence risk with hardware. And then you've got very specialized sort of application of hardware. So, you can have medical clinical hardware.
Mm,
that goes into certain environments that I just don't know about, and that may be around and have a less obsolescence risk. But that's the sort of stuff I don't know. And if I was to look at
mm,
a genuine opportunity that seemed to have good signs of life and sustainable, I would be reaching out to my network with people who
mm.
understand that space and go, hey, what do you think of this?
Yeah. Yeah. I think it's a tough one when you don't have experience in that particular space. Like, I take a look at stuff all the time and I'm like, I love this, but I don't understand it. So I'm probably not the best person to invest.
Yep. And then certainly earlier stage stuff, I think you might want people who get it more, especially if they're going to be
Yeah.
supportive or helpful or active with the founder to support the founder, and that kind of smart money.
Mm.
We generally can't offer that with hardware.
Yeah, fair enough. And do you have any exciting deals coming up that you'll be offering investing in through the syndicate?
Yeah, we do. So really excited that we're going to have a deal coming out any day now. We're waiting to finalise all the bells and whistles around it. But certainly, my hope is even this weekend potentially, if I can get all of that done, I'm going to be launching that with Joanna imminently.
Awesome. Maybe you can tell us a little bit about it.
Sure, absolutely. So one of the things that our backgrounds are in is retail. It's customer-facing sort of SaaS, and this is a B2B sort of platform that has gotten fantastic traction. It's got within 6 months of launching, they've got contracted paying clients, and the scalability around it is pretty exciting for us. I will, because I haven't checked with the founder whether they're happy to announce yet, so I'll keep the names under wraps. But it's kind of it's putting together a lot of customer behavior and and leveraging people's preferences to go digital now, using their mobiles for a lot of things. So we're seeing it kind of hits on trend, but there's also a very viable, sustainable business model behind it.
Awesome. Well, you'll have to join the syndicate in order to find out what that deal is. And I'll pop the link in the chat again for anyone who wants to apply to join. Cool. If we have any other burning questions, team, this is the time to put your hand up and ask them, or pop them in the chat. We'll be on here, and I'll just keep talking for. Actually, I guess maybe Vadim, is there anything I haven't asked you that you'd like to share?
Look, I'm not sure if there's anything you haven't asked, but one of the things I've realised I didn't mention, again, I want to, for anyone that's joined late, unfortunately, Joanna's unwell. She's in her third trimester and just picked up a bit of a loogie, so she's unwell at the moment. But she's got a lot of experience, and one of the things I didn't mention about Joanna is she's actually a StartMate First Believer, so really closely involved with that community as well, and really passionate about making sure that we're supporting the startup ecosystem and as part of that community as well.
Oh, awesome. That's, yeah, definitely makes sure. I'm glad you mentioned that, because Joanna's fantastic, and love that we're all, she's joining us on the kind of investor motherhood path as well. So awesome. Thank you so much for your time today. Vadim, any other burning questions? This is the chance. Otherwise, Vadim is definitely available. You can reach out to him on LinkedIn, or you can reach out to us. I think let's put the link, the email for us in the chat as well. And yeah, our chats our DMs and everything's always open. So thanks for your time today.
Thanks, Cheryl. Thanks, Vix. Thanks all.